take that. Oh, I'm so sorry. I started the countdown again. Look at that technology. Okay, so welcome everybody. I am Barbara Carr with Barbara Talks Business, and I am here with my good friend Bill Hackett, and I am going to share some awesomeness with you today with him. So let's start with the basics. Today is season 2, episode 10 of Barbara Talks Business. And Bill's official name is William Hackett, and he is with the company called Wave and Breakout LLC. I'm going to give a real quick shameless plug because Bill and I met through BNI. We are in the same BNI chapter in Mokina, Illinois. It is called People Helping People. If you've never heard of BNI, or maybe you have and you'd like to get involved, contact either one of us for an invitation to come check our meetings out on Thursday mornings. All right, so the topic that we're looking at today is understanding market behaviors. So let me go ahead and give you a little bit of info about who Bill is before we start hearing from him, because obviously you want to know his credentials before you believe what he says, right? So let me tell you a bit about Bill. Bill has worked in the financial industry for over 30 years, investing assets for clients at some of the largest financial institutes in the whole world, in the whole United States. He has been an equity trader, options principal, trade desk number 24, and worked retail management assets for high net worth individuals, families, and small business owners. So if you fall into one of those categories, high net worth, family, or business, you probably want to listen to this because Bill has great information for you. So Bill, I have a whole lot of questions, but I do want to remind my audience that if you are watching this and you have questions, comments, concerns, anything like that for Bill, you're actually able to ask them live on YouTube. And if Bill is available to answer the question, if we don't run out of time, he will answer them. I know whenever we get financial advisors and people in the financial industry on here, people do ask a lot of questions. So make sure you ask your questions sooner than later so that we have time to answer it live. If we don't get to it live, we'll give you Bill's contact information at the end of the show so that you can reach out to him outside of this show. All right, so Bill, my first question, and these first couple come from your bio. What is an equity trader?
An equity trader is someone who specializes in buying and selling stocks.
Okay.
You have to be licensed in the security industry in order to do that. And you can get that license, you get that license through what's known as a Series 7. It's the most difficult, comprehensive test for a financial advisor. Once you get that, then you have the ability to demonstrate your proficiency for buying and selling by getting that regulation and that security license.
Okay, very neat. Okay, my next question also comes from your bio. What is an options principal?
Well, an option, first of all, let's talk about that. An option is a investment product that is used to capture an instrument for a certain amount of time. But a principal is over the group that trades options. So my role as a principal is anyone that's demonstrating a buy or sell using options. I would have to get my eyes on that transaction to make sure money was in the account, we were going the right way with that particular instrument. The customer was aware of all the complexities around it, and a principal has to review before the investment is placed in the client's account.
Okay. Now, this stuff sounds so complex that I don't know why anybody would ever want to try to do this themselves. So, Bill, I admire you so much because I don't think I could do this. I don't think that I'd have the patience for how much complexity it sounds like this has for, always making sure that, like you said, you have the eyes on it. And so that's awesome. I'm so glad we have people like you who are willing to do this. Okay, my next one. What is trade desk number 24?
Great one. That's another security license you have to take and you have to have to manage people in the financial industry. You have to be a security 24. That means you've gone through the different regulatory classes. You've substantiated with testing. You're getting, that you have a good handle on the material. Once you get this 24 in the industry, you're now allowed to manage other investment professionals.
Okay. So you could build a team of other people like you underneath you.
Correct.
Okay. Very cool. All right. So let's move on to, what you're doing specifically right now for this call. I know that you're a financial planner. How long have you been a financial planner?
Barbara, financial planning is much easier than the world out there would have you believe.
Really?
And yeah, it's not as hard as you think. And let me talk about financial planning. The first thing you really want to have a good handle on is good practice. So the first good practice is saving money. Saving money. Pay off your bills every month, but at the end of the month, don't spend more than you make. And the difference is going to be put into an account, hopefully very liquid, hopefully very secure. Once you get to 3 to 6 months, then you go to the next facet of financial planning, that is to cover you in case you don't come home from work tonight. In case Barbara Carr doesn't come home, who's going to take care of her children? Who's going to take care of the everyday activity that Barbara normally does for her husband? So we talk about that. And that financial pillar is taken care of with insurance, life insurance for most cases. So once we get the first pillar done with liquidity, we talk about our longer protection program with insurance. Now we're able to take the excess money from our savings program and put that into the market to get a little higher return. Okay. And then the next facet of financial planning is at the end, you get done working, you've done everything you can. You've saved money, you've invested it, you've protected yourself along the way. Well, now we talk about that next stage in life with Social Security, starting a second business, perhaps, gifting, starting a foundation, donating money to a charitable source. So that's all wrapped under the very name financial planning. And I don't want to confuse people, but financial planning is not as hard as it seems. Spend less than you make every year. And once you get over liquidity, put a little bit in an investment product that you understand and you can come back to. And for that, you're going to receive a relative higher amount of return.
Okay. All right. And you did make it sound so simple. Right. So thank you for that, Bill. And so as a financial planner, you've been doing this for decades.
I was licensed by the first major bank in Chicago in 1991. So I supported with the classes I took, and then I was allowed to start working with some high-end people shortly thereafter. So yeah, I've been around the whole world of investments, the whole world of advising, the whole world of planning for quite a long time. Yes.
Good. So that means you know your stuff in my book. Okay, so Wave and Breakout LLC, that's your company, correct?
Correct. Yes.
So how long has Wave and Breakout been in operation?
Great question. When I started Wave and Breakout in August of 2011, I was working with some high-end customer, and I just had a handful of them at the time, and I didn't have to fully get registered with the industry. Fast forward, once I got more clients, once I had more assets under management, then I had to form Wave and Breakout and now go into that full time. And I've been doing it, like I said, since 2011. I chose Wave and Breakout because that's how the markets perform. The markets perform in this sort of almost like an ocean wave, right? We have waves up, and then we also have waves when they come crashing in through a correction or a pullback. So I just love that. I love the way it looks. I love the way the water sounds. And so I named my company Wave and Breakout from that.
You know, that's interesting that my very next question was, where does the name Wave and Breakout come from? And you went right into it. So I just threw it up on the screen because I was like, hey, he's answering it already. That is really cool. So because I was like, where did this name come from? Because again, someone like me who doesn't understand all this market terminology, I had no idea, but it makes sense now that you've explained it. Okay, so Bill, let's go into some of the harder questions. How do you define risk?
Great question. The level of risk that people have is what's going to keep them up at night. What is going to get them where they lose sleep? And there's some people who just can't take it. They can't take the thought of volatility. They can't take the thought of an account that possibly could go down in value. So that's what I would define as risk. You know, that thing that keeps you up at night, that thing that causes you to not get a good night's sleep. That's probably a good segue to look at risk. If it's causing you stress, and if it's something you're uncomfortable with, well, then you have to identify that. You have two choices: either to satisfy that with taking less risk, or do something that's going to generate lesser returns. Because unfortunately, for 100 years now, the market has been going up and down. You know, and so the market is full of opportunity, but I have to warn others that sometimes you take risk.
Yeah.
So you have to define it. What's comfortable for Barbara Carr might not be comfortable for Bill Hackett.
Okay, fair enough. So risk is different for each person, and is going to be defined differently for each person.
Yeah.
Good. Well, how would somebody manage risk then after they know what their level is?
Great question. So if you're comfortable with an expected rate of return, you have to also be comfortable with that associated amount of risk that comes from that kind of return. And if you don't have a level of tolerance, then you cannot take that kind of portfolio. You cannot be invested in that particular program because it's taking on too much risk. So we quantify that by looking at investment time horizon, the kind of money you have coming into this particular program. And then we talk about, can you be comfortable with a 10, 15, 20, 30% loss? But in the same instance, you also, reasonable expectation would be to have that as a return as well, 10, 20, or 30% return up. So that's a reasonable expectation. So risk is different to everyone. My world of risk tolerance is very high. I have seen things, I have done things, and so the benefit I bring to the table is when people understand the world that I live in, they have a very good feeling and they understand that I'm managing that risk to the best that I possibly can. And it makes them easy at night. They sleep good. They give me wonderful emails and phone mails. And so yeah, it's a good feeling to know that you're not alone, that someone is actually looking and managing that risk for you.
Yeah, I bet that definitely is a comforting feeling to know that not only is a second set of eyes, or maybe a third if it's your spouse as well, but this is an expert set of eyes, right? So it's one thing if an individual or even a married couple goes out into the market on their own and they've got two sets of eyes on this, but when you bring in that expert set of eyes like you, Bill, who's been through a lot of ups and downs over the past 30 years, I could see how that's definitely comforting.
It is. You know, Barbara, we're going to have a market correction. We always do. And we're definitely going to have one. So this will actually be the 6th market correction that I will be managing assets through. I've done it before. 1999, everybody remembers Y2K. They thought the whole world was going to blow up,
Yep.
right? Nothing happened, right? Weapons of mass destruction. You have all kinds of bubbles. You have all kinds of reasons to allow the market to have volatility. But at the end of the day, the market climbs this wall of fear. And so people have to understand that. There's no place in the world than your money in the United States stock market. It's going to treat those dollars the best that you could ever have, you could ever hope for.
Good to know. So what are some common mistakes that people make when investing?
Oh my gosh. I could go on. I could go on and on and on. But the biggest mistake is they buy high, and they sell low. So what I mean by that is, say Apple's trading at $150 and they love Apple. They just spent a bunch of money on a phone. They have an Apple Watch. They have an Apple computer. They're like, hey, I want some Apple stock. Well, they just run out to the market and buy it. Well, unfortunately, Apple is a cyclical company like many others in the industry, and they don't always have robust times as they're going through right now. So their purchase of Apple comes in at 150. Apple drops to 120. What does that mean? That person lost 30% or almost 30%, I should say. All right, so what do? They sell at 120 instead of being in a position to look at a company, understanding behavior, and now they come in and buy at 120, and then maybe they consider of taking a little money off the table at 150, but they do just the opposite. I see that over and over and over again.
So they get nervous and end up losing money because they didn't understand how the market behaviors worked.
Correct.
Interesting. Okay. What is the next common mistake that just pops in your head?
Well, they use their investment portfolio or their account like a gambling, like they're at the racetrack or Las Vegas. No. It's investments. It's not gambling. You have to be very good with money. You have to be tight on risk reward parameters, but you cannot look at your investment portfolio like it's gambling. And I've had many people say to me, oh, I want to just take a couple of thousand or a handful of money and I want to put it on this one stock. I know it's a gamble, but I don't mind losing all this money. I would say, why on earth would you have that kind of mindset? You can't do that. Be laser beam, be focused. You know, why did we buy this? For whatever reason. Does it make great money? Is it a product that you currently use? Does it pay a really good dividend? All right, there's got to be some kind of tentacle. There's got to be some kind of attraction why you would buy that. You just don't want to say, I'm going to take a chance like I'm gambling. That's crazy. So I try to talk people out of that and actually try to point them in the direction of a little more sensible practice.
Okay, good. All right, give me one more common mistake before we move on.
Let's see. Oh, they listen to their next door neighbor, a guy who's a professional painter, and the next door neighbor says, hey, you know, you should buy Tesla because they're selling all kinds of cars. And the guy comes to me and says, hey, my neighbor just said Tesla's a great car, a great company. I want you to buy me some. Really? You're taking advice from someone who's not even in the industry? That's another common mistake.
So, and I know you said there are so many more, but for sake of time, we're going to move on. But if you guys want to know more, you can reach out to Bill later. But Bill, I think the question people are probably asking now is, how do we avoid making some of these mistakes ourselves?
Yeah, good question. I think you have to, good fundamentals will always trump market corrections. So when you are going to do something in the world of investing, and myself, I specialize in individual stocks. So I want to be very comfortable with the balance sheet of that company. I would never buy a company that is not going to make money. That's crazy. But yet there's plenty of companies that are trading and they actually lose money every year. Well, that's the first thing we talk about. That would be making a very common mistake. You're buying a company that is not profitable. Well, if we look at our own business, how can we possibly operate in a realm of unprofitability? Why on earth would you consider then putting your money into a company that's not profitable. That's crazy.
Right.
So that would be a way to avoid some very common mistakes. Just make sure the company that you're thinking of committing to, hopefully for longer term, has a product you understand, maybe currently use. They're fundamentally sound. They have some things that are happening that I'm excited about, maybe a chance for some increased sales, which would be profitability margins going up. You know, all those things I need to understand first before I commit into a company.
Okay. Okay, good. I like that. So define for me a fully licensed investment advisor role.
Well, you know what's so funny is there's a lot of people who go out there and call themselves advisors, yet they've never substantiated fully licensed. So you have insurance people that call themselves an investment advisor. Well, yeah, but guess what? I can only use insurance products. You have other people out there that will sell you and market mutual funds. Well, yeah, I'm an advisor. I'm telling you to buy and sell mutual funds, but guess what? I can't do insurance and I can't market stocks. So a full spectrum investment advisor can offer every product.
Okay. And you are a full investment advisor, yes?
Fully licensed, I can offer every product. I choose not to. I choose to focus solely on individual stocks. That is
Okay.
my forte.
Good. Good, good. All right. How do you go about then setting up investment accounts?
Great question. First thing we have to talk about is taxes. I know I'm going to give you capital gains. There's no problem with that. But let's talk about what happens when those capital gains come in. Are you going to be happy paying money to the IRS? If you're not, we have some accounts to look for. Do you need any kind of tax break? Well, then we know we're going to probably put some money in a conventional IRA. So, for instance, if I put $7,000 away this year, I'm over 50. I get $7,000 lopped off my income at the end of the year as a benefit from putting money in an IRA. Okay, that's one of the reasons. The other one is some people come to me and say, "Look, I've already maxed out my individual retirement savings plans. I have extra money because I'm a very good saver. Are there other accounts I can take advantage of?" Absolutely. And then we start talking about, you know, the Roth IRA, or we have trust accounts that use my ability. We have individual accounts that don't mind taxation, don't mind it. So those are a couple of different accounts that we talk about.
Look at that, Bill. You started answering the next question right away, too. It's like you read my mind. Okay, so and then I do know that you focus on helping people, like you said, like we said earlier, high net people, families, small businesses. So really, if you've got somebody who's in maybe even all three of these categories, this is something that you would take a different approach with each type of person. There's not like a one size fits all type of account. Is that correct?
Correct. Now, yes, you're absolutely correct about that. Now, at the end of the day, though, the portfolios that I come up with are very similar depending on risk. So, for instance, if someone came to me and said, "Hey, I've got a window of 10 years before I need this money. I want you to go at it. I want you to get this to grow as hard as you can because I have not adequately saved for retirement. I'm behind the eight ball. So I have liquidity out there. I have everything covered, but I need you to work on this account as aggressively as you can." That portfolio will be very common for other people that will have that same desire.
Okay.
Okay. So it's done through portfolio allocations.
Okay. All right. So there might be some people who have similar types of portfolios, but it's based on a lot of questions that you ask, including that risk question.
Correct. I am a person who generally gravitates to people that have a high amount of risk because my portfolios are very volatile. And people that understand that and that have continued to do business with me can attest to the fact. You know, the portfolio can go up or down many instances by 10%, sometimes in a month or a quarter. But the reasonable expectation you should have at the end of the day is when we do at the revisit, and I always say, hey, every quarter, let's touch base, let's go over things. I can tell you reasons why I did something or reasons why I'm looking at something. You should have a reasonable expectation that your money is going to go higher each and every year, almost like a wave. Okay.
All right. And then again, there's where the name comes from.
Yeah, for sure.
I like it. Okay. So what is your process for evaluation and selection?
Great question. I'm gonna ask you a question. What is, let me see. What does Tesla, Amazon, 3M, oil, and a biotech have in common?
I have no idea.
Absolutely nothing. Absolutely nothing. That's what makes them so much desirable. Those different components make up a portfolio. And so when you evaluate these, you've already identified they're all fundamentally sound. All these different companies, they operate in different sectors. They have varying degrees of capitalization. So some might be smaller, some might be larger. But guess what? They don't compete in each other's background. They don't take business from each other. So they're independent. And what I love to do is take these, put them in a portfolio for maximum opportunity in the stock market.
Okay. I like that. So you're using strategies to make sure that that, like, if one industry goes down, for instance, it's not your whole portfolio, because these are different industries.
You have 11 sectors in the S&P 500, and depending on any year, 3 to 5 of those sectors will actually lose money over the course of a year. And so what I do is I have a great propensity is I avoid those. I avoid those like the plague, and I try to use my overall selection coming out of sectors that are generally doing well.
Okay. Well, Bill, right now, while we're in the middle of this COVID-19 pandemic, how has things changed for this industry, and how are you proceeding in the current environment?
Well, I must tell you that everyone thought the end of the world was going to happen with COVID. You know, worldwide, I think we had over 2 million deaths, which is just, I know the United States had about 500,000. I mean, that's some serious stuff, especially when it's pinpointed on one, you know, ailment. But I will tell you that companies in the United States are resilient. There are companies that not only developed an efficiency strategy, but actually excelled during the whole COVID pandemic because they were doing technology. They had benefits wrapped up inside their company that still allowed them to do business, whether it be a Zoom platform where they didn't have to meet in person. So they definitely thought out of the box, and many of these companies have done tremendous, and some of those are in my portfolios.
That is awesome. Yeah, because I've seen even some of the small businesses around here also grow during this time, right? And it is an awful situation that we're in with all the deaths. But like you said, businesses in America are resilient. And unfortunately, some of them have gone down because of this, but businesses fail every day, even without the pandemic. So so it is good to know that some of those bigger companies that are in the stock market are excelling as well, because then that means people are making money still, right?
Exactly right. Yes, it does. You know, that's a good thing. And if we can continue looking on the positive side of things, that will continually unfold into a good thing. The economy's rebounding. It's clearly evident. Just take a drive on any major expressway and look at all the trucks. Look at all the commerce out there, man. That all the houses that are being built now. I mean, that's huge for the economy. There's a fact that every new house being built is going to affect 200 different individual businesses for the construction of that one house. And there are multiple houses being built. So what does that mean? Copper, cement, steel, all that stuff's going to go higher. Well, there's opportunity if you buy those companies. So that's just, there's one little gem that I find that's happening in this whole COVID pandemic sort of happening.
That's a neat statistic. I've not heard that before, but I can definitely see how that is accurate. That is really interesting. Okay, so now we're going to move into a couple of fun parts of the show. Not that this hasn't been fun, but we get a little bit silly here, and then we'll jump back into business after this, okay? So the first thing is brag time. Brag stands for Barbara's Random Acknowledgement of Greatness. And so I don't ever tell the person that who I'm going to talk about that I'm going to brag about them on this show. So if you're watching this and you know who this person is, feel free to tag them so that they can see that somebody's bragging about them. But otherwise, they may never see it, and that's okay. So who I'm bragging about today, his name is 𝗕𝗥𝗘𝗔𝗞𝗢𝗨𝗧. And I want to brag about him because he is so generous with his time and his blessings. He goes to our church, and there's a cafe inside of our church. And when we first started going to this church about 3 years ago, it was the kind of cafe where like people brought in homemade goodies or Dunkin' Donuts or something. And there was a jar on the counter for if you wanted to pay something, you could put it in the jar. If you didn't want to pay, that was okay. Right. And so people would put money in the jar, and then the money in the jar went to support missions across the world. Well, when 𝗕𝗥 and his wife Chelsea started coming to our church right around that same time, I believe, they own a coffee shop in Chicago called the Baglers. And they looked at it, and God had told them that, hey, this is a place for you to share your blessings. And so what 𝗕𝗥 and his wife did through their company, and because God had, told them to, is they decided to donate an entire, everything that a cafe needs to run, including big thousands of dollar machines, donated them to the church, and all the bagels and coffee and all that, they donate every single week. And every penny that comes in goes directly to missions, to support missions. They don't take any cut of it. They pay the employees. They're just giving with their time and their resources. And so I just wanted to throw out that 𝗕𝗥, you are acknowledged and you are appreciated, not just by me, but by everybody at our church. I'm sure I'm speaking on behalf of everybody, and probably anybody who's watching this could even see the value in that. And so thank you, 𝗕𝗥 and Chelsea. All right, so next we'll go into a part that, Bill, this is a really fun part. People can win $50 here because I'm looking for a name for this segment. As you see, the last segment was called Brag Time. I don't have a name for this one, but if you think of something, Bill, you let me know because you can win $50 also. So whoever thinks of the name for this, put it in the comments of the YouTube video. And then if I pick a winner, when I pick a winner, because I'd like to have a name for it soon, you win $50 cash. So, from Fuse. So here are a couple of the entries that have been put in already that have not been chosen. They're not necessarily thrown out yet. I just haven't fallen in love with any of them yet. So we have somebody who said it should be called Good, Good, or Better, because I always say good, good. Then we have somebody who recommended it should be called Presenter's Choice, because I always ask two different this or that, and then I ask you to tell me what you want or what you prefer. And then somebody else said they think it should be called quick fire questions because it really is coming at you super fast. I'm like, this or that, this or that, this or that. So again, I haven't fallen in love with any of those. So if you've got another idea, put it in the comments. And the comments have to be on YouTube. That's the only place I'm looking. All right. So Bill, here it goes. And if you are watching this, you can comment in the chat as well what your answer is. Be a participant here. So Bill, as far as movies go, comedy or action?
Oh boy. Yeah, I would say action. I love 007, James Bond. If I was reincarnated, I gotta believe it would be a James Bond kind of character.
Okay. All right. Let's see. The next one is sweet or salty?
Neither.
What do you prefer then?
Well, you know what? If I eat a piece of cheese, I want to taste it with some salt, so I'll say salty.
Salty? Okay, okay. So I think so far we've been opposite, because for my choice for the first one, it would have been comedy. I don't understand the action ones very much. My husband took me to see, I don't know, one of those Marvel movies, and I had no idea what was happening in this movie the whole time. But at the end, somebody said, "Did you enjoy the movie?" And I was like, "Well, I enjoyed the popcorn and soda and being with my husband." Like, I did not know what was going on. It was too much for me. And then, of course, on sweet and salty, well, I think like most women, not all, obviously, but I love my sweets. I love my chocolate. In fact, I even hide some right in my drawer, right here in my desk drawer. Don't tell my kids. Okay, now, Bill, this next question I came up with because of your business name when I was trying to figure out what I thought that name came from. Swimming or fishing?
Oh, definitely swimming.
Swimming. Okay. Do you fish at all?
No.
No. I have tried fishing one time, and I somehow caught 3 fish that day, and I was so terrified of them. So yeah, I prefer swimming as well, for sure.
I like a little action, little quicker moving, right?
Yeah, and for sure for me, like, I like to swim where there are not fish, because I'm always like, is that fish trying to eat my toes? Okay, so Bill, let's go ahead and give your contact information in case somebody's like, "Hey, Bill's awesome, I need to reach out to him." What are some ways that people can contact you?
Well, the quickest way is to just shoot me an email. If there's something that they want to talk about, it's info@waveandbreakout.com. That's a nice way to start up a conversation. You can reach out and give me a phone call, but sometimes, when I'm busy when the market's open Monday through Friday, and the promise I make with people is I'm gonna be keeping a watch on things while the market's open. That's my job. So generally, I don't do a lot of phone call work then. I'll do it after. And so, 4 o'clock, 5 o'clock, I generally return calls. But that's a great number for contact. Leave me a little specific, and I'll try to I generally try to return all calls within 24 hours.
Okay, and then your website address.
Website is Wave and Breakout. info@waveandbreakout is an email. My website, actually,
I got it up on the screen for you.
Perfect. That's it. I forgot about caps. I do capitalize Wave and Breakout.
Yeah, so waveandbreakout.com. So that's where you can get more information about stuff Bill's doing as well. But we're going to go into a few more questions real fast before we end. But if anyone else has questions, feel free to ask them in the chat, and I will go check that in just a moment. Okay, let's see what we have here. Did I have any more questions? Oh, well, you told me about, you talked a little bit about the liquidity of doing the emergency fund, but as far as practical next action steps, if somebody's watching this and they say, "Hey, this is great, but I don't think I'm able to, talk with a financial advisor yet, or I don't know if I'm ready to put money somewhere else right now because everything's a mess." Talk about that first step of something they could be doing at home even before they're ready to talk to you.
Yeah, I mean, financial planning works when you have a good behavior and you can budget. Financial planning doesn't work with the folks that are not good at budgeting, plain and simple. Because the first pillar in financial planning is getting yourself in a position to have 3 to 6 months worth of bills, let's say, off to the side in a checking account. And I must tell you, that is the biggest challenge for most. They can't get to that level, so they're never going to be good customers for me.
Bill, do you have an option of like a savings account type of option where somebody's able to just put money away and it does build an emergency fund without them, like, out of sight, out of mind?
Yeah, I mean, we have a lot of preferred banks in the area, and they're offering some pretty neat opportunities to get some money saved for a year and a half. And for that, you're going to be given some interest. So that would probably be the first place I would start. I have a lot of great bankers in my BNI chapter. I mean, they're very good at giving you an account that's going to pay some interest. So that would be the first step. Get to that level of liquidity that we talked about. And once you get to that level, then we understand budgeting, we understand liquid accounts, but more importantly, we've demonstrated that we can participate with financial planning. So we're going to be good investment customers to an advisor.
Okay. Okay, good. And you had mentioned that you can give a free individual equities or portfolio review. What does that mean? If somebody's like, okay, I don't know if I'm ready, but I'd like to find out, what would that look like? What is this individual equities or portfolio review?
That's a great segue too. Many times people think that they've set up a robust portfolio. And what I do is get my eyes on it. So we talk about sectors, we talk about capitalization, we talk about overlap in business, we talk about fundamentals, the matrix that I use to justify looking at a company. And so I'm willing to do that for folks absolutely free.
Okay. Good. And you're able to tell them if, hey, yeah, you're ready to take this move, or maybe you might tell them, here's a few things that you can do so that we can get you in a position to make this move.
Jim Cramer calls it buy, sell, or hold. And that's what I'm willing to do for the customers.
Awesome. Good to know. And I do know, I will say, Bill and I have had lots of one-on-ones, and I learned so much every time I talk to Bill. Even today, I've learned so much. And Bill has given me some amazing advice. In fact, my husband and I are working on strategies to get us to a level to be able to utilize Bill's expertise. But one of the things that I really adored about Bill, I know that you just care so much about people, and what you do with your company is like, one of my worries was, well, we have to have like $100,000 before someone like Bill will even talk to us. And then Bill meets with me like 3 times in a month. And I'm like, oh, wow, he's so amazing. And like, I don't even have $100,000 for him. But that was one of the things that I really appreciated the most about you, Bill, is that you are willing to work with people who, are starting small and can build up. And so do you want to touch on that at all?
Yes, for sure. My favorite program is to get someone who's coming out in the world of investments, coming into the world of investments, and I want to make sure that they don't develop bad habits. I want to make sure they have a good mindset. So that is the best gift that I can give into the community. I can give back to society. I can give back to people that I truly enjoy working with and I love in many instances. But I'm able to say, hey, guys, look it. After 30 years of practice, being in the trenches, buying and selling securities, seeing markets go up and down, I can give you some good takeaways if you listen. Now, everybody's not going to listen, but that's okay because there's a lot of folks that will.
Yeah, definitely. And you make it so easy to understand, Bill. I remember the first time that you and I met, and you even you shared your screen with me. You showed me some cool stuff. And at first I was like, oh my gosh, this is going to be so confusing. But then very quickly I was like, wait a second, this isn't so confusing. And this is exciting. I can't wait to tell Isaac about this. And I was just so excited. And so of course, when I shared it with him, he was like, okay, let's all 3 get on a phone call. And that was one of the things he appreciated much about you too, is that, you were willing to take that second phone call with the spouse on the line, right? To say, hey, help me understand now that she's all excited.
Hey, Barbara, I got to tell you, when I was at Bank of America, Merrill Lynch, all right, I was with that huge banking institution. We could not even get involved in a customer or a portfolio or a business owner unless they had $500,000 in assets.
Wow.
That was our sort of marketing. Getting in front of these people, and that was it. Well, guess what? In my world now, I brought down those minimum levels because I want to demonstrate that anyone, I don't care about what you do for a living. If you have the mindset to understand financial planning, there's no reason you cannot take advantage of the same programs that some of the wealthy and rich do. You just have to understand the rules of engagement.
Now, Bill, is there a minimum that somebody should have in their hand before wanting to have you go to work for them?
You know, Barbara, it's funny because I don't have minimums. I tell people I'll help out from $1 to $1,000,000 as I have. It's based on comfort level. It's based on your need. It's based on time horizon. It's just based on so many different things. But just let's reach out and have a conversation. I mean, the
Yeah,
worst
for sure.
worst we could do is part ways and say, well, we're not going to be a good fit for each other. Or what might be the case is you're like, Bill Hackett, you're dynamite, man. Let's do some stuff together.
Yeah, yeah, I agree. And you are dynamite, Bill Hackett. Bill, one more thing that I know about you is that when you shared your pricing structure, both Isaac and I were like, no way, no way, because it is very different and very much more appealing than other financial advisors in our culture. Is that something you could share on the call?
Absolutely. Yeah, it's real easy. I do fees based. I don't charge any commission. So normally when you do work with an advisor, majority of them are commissioned. And basically you pay them a fee for whatever product they're delivering. Okay. But the problem I had is when you charge a commission, generally you're limited to a certain amount of what's out there in the world of investments. Firms will not let you do everything. So, but when you charge a commission, you're limiting your scope of investments to whatever programs your institution is offering you and saying that you can now offer your clientele.
Okay.
So I charge a fee, and it just takes all, it basically puts the client number one on my list, as always should be the case. The client's number one, not me, not my firm, not my product, not my company. It's the client. And I do that in a fee-based program, and the client can understand that because now I truly have their best interests to get the account to grow.
Yeah.
Because I'm being able then to assess a higher fee. So typically that fee structure is very similar to everyone. 0 to $250,000. It's 2% annum divided by 4. Over $250,000 to $500,000, it drops down to 1.5%. And over $500,000, which I have a handful, those operate at a 1% fee per annum.
Wow. That's a win-win all the way around. Like
People
it's
do
good
appreciate that.
Yeah, it is great for the client because they're not having to give away much of their money, but it also allows you to make good money as well, especially with those higher accounts, right? So I see that as a win-win, and that's awesome, Bill. Okay, so real quick before we get off here, I'm going to do one last shameless plug for our BNI chapter. If you are interested in learning more about how you can network both locally and globally, contact me or Bill, and we could get you invited to our chapter. If you want to find out more about Bill and maybe see some of the stuff he's got going on his website, you could go to waveandbreakout.com. His email address is info@waveandbreakout.com. And then his telephone number is 708-218-7003. But it is best if you're trying to call him to reach him after hours, because otherwise he's working super duper hard on people's accounts during the day. So, Bill, do you have anything we didn't touch on that you want to make sure that we cover before we jump off?
No, Barbara, I just wanted to say I appreciate you having me on today. It was a hoot, and thanks. Hopefully your audience got a few takeaways out of it.
All right. Thank you, Bill. Have a great day.
Take care, Barbara. Thanks.